Okay, guys, hope you're well. I'm doing an oil trade for Kojak in the group. Little salute to you. And what you'll find is a lot of what I do is repetitive. I do the same thing over and over and over. And one of the reasons why I do it on the channel is repetitive is because that is the secret to trading. It isn't looking for a magic formula. It's just rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. And what you find is over time that pays off quite well. So we're going to put it to the test right now. So if I flick this over into the oil chart, what we can currently see, I've already been in to the group, and this is following on from the market call live we did this morning. Now, this morning we analyzed the DAX. We did it fully, broke it down, showed them where entry points is, where exit point is for sort of protection of the account was stopped, but also the profit, and it went bang on to target. Can't get any better than that. Did the same with the pound JPY at the same time, so I was monitoring that while we're talking, and then Kojak opened his gob and he wanted to see oil. Okay, so that's what we're doing. Now I'll pull this bigger version up in just a second. Now on the Discord itself, I'll take it one step further when I'm analyzing things. There's a video here of what I'm about to do right now. And as you can kind of gather, it's in here before I've done it. So it's a bit harder to do a trade beforehand than it is after, because so many times you see them on bloody internet saying, oh yes, this is a trade, it's a live trade and all this. It's not live because they're telling you what happened after the event. Well, we're going to watch this together. So what else can we see? First thing is, I need to figure out what my narrative is. Well, my narrative is this. This is the bit that I've just shown you. It's a bit of a clearer thing. So I'm looking at oil. So it has a current ATR of 252. It's currently selling as my trade criteria, and it's based on the high time frame and what's going on, and it's telling me to scalp it for about 18 pips. Okay, so if I'm scalping, I'm down on a 5-minute chart. Count the candles back. 1, 2, 3, 4, 5. Under there is my order point. We'll start it off at about a 5er. So I'll just drop that down there. Just put an order in. Okay. 1, 2, 3, 4, 5. Maybe push that up a little bit to the bottom of the tail. If it goes in, brilliant. And I'm looking for about 18, 20 pips. Okay. So we're going to set it off at 20 pips. Just because it's a nice, easy figure. Right. Price has gone in. Quite happy with that. So I know I'm getting down to here as a baseline. And what's that? Well, it's actually the break of this section based on the pullback. You get in and around this red line, which is what I've done. The higher I could get the price up, the easier this becomes. Now we triggered in, I've got to figure out where it is that I might be wrong. Well, if I'm wrong, I've got to step the chart out and have a look at the last swing points and protection. Well, there's a number. There's a 1 here. Got a protection point there, protection point there. And if I want to be ultra aggressive, it's up there. But I have to ask myself a question. Is it worth it going all the way up there? No, it's not. Because I'm only trying to get a target to here. So this is the swing point that I'm interested in. So my last point of entry would be that black line. So what you'll see is some orders coming in that are filling up this gap. It's kind of a ladder trade, stroke madness trade. And my last point will be there. And then I have a rule set. 1, 2, 3, trade. 4, get out where I got in. 5, just get out. Simple as that. Okay. Now, this can run all the way down to there, but there was a problem. And that problem is that the dominant direction is in a question mark this moment in time. So by definition, it could swing either way. But I've got more ducks in a row to the downside than I do to the upside. So I'm taking this short. Now, there is other elements I can do. I've also got this big move here, which is now what I'm going to do to help define the target that little bit better. So I can move that to there, okay, run it through, and I'm going to drop some blue lines in. Now what these blue lines represent are areas of attraction. Now the areas of attraction based on that last drive of the fib. Now what we also have is a 50%. Now the way markets operate is very simple. If it holds below the 50 for a sustained length of time, it'll try and go back to the lower point. Right? Now we can also put danger zones into this. Now the danger zones are these. So if I put a zone onto this, which is here, this red zone represents danger, because anything could happen up here. It could tittle around and then come back. If it breaks through, it's off to the races. And it does the same down here. So I'm actually in a relatively safe zone as long as I'm trading between these two red areas. Once I get through those red areas, I might have a problem. So at the moment it's coming up, bouncing around, look for it to come back. There's my target, safe target, happy. Trade setup. I just have to let it play out now. So all I'll do is I'll just put in the extra orders as pre-orders, let it play out, and come back to you at the end. Okay, Kojak, there you go. That's your job done. Very, very easy trade to operate. So let me just make certain I get my tickets off first. So get rid of all these tickets, because if you don't switch your tickets off, you have a habit of leaving them and then they get triggered when you don't want to. But there's 100 quid. It's taking it about, I don't know, 5-10 minutes maybe, not a lot. But it's all based on a premise of following a direction and then just mapping the trade out. And that's it. I can't make trading really any easier than that. If you've got your levels in place, which I have, those key levels, you need them, right? Otherwise you're trading completely blind. Then you just look to see what the general direction is. Got the general direction right, it'll forgive the bad entry. And then you just want a reason to go to market at the right time. Now, everything was in place. I was very happy with the way the trade was going to operate. Look for a key point of break, which is what we did. In it went. Get paid, not greedy, walk away. And I do that every day. And if you watch the Vanguard, you'll see how well you can do with just steady, simple steps, day in, day out. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.